Emotions are the biggest threat to the traders.
Do not try to adapt to a 24/7 market.
Those who will embrace the AI will be doing better than those who not.
Traders should focus on the strategy which works best for them and improve that strategy.
He blew up completely the whole account just 1 week after I joined that.
They overtrade and in the end they end up even in the bigger loss.
The easy mode in crypto might be slightly behind us, but it's there.
If you have some relationship problems or something like that, all of this will reflect always in the trading.
To get to that winning strategy or winning algo, it's like 1 in 100,000.
I think traders should not rely just on bot. It should be always basically cooperation between bot and between the person.
Welcome everybody to HyroTrader's Crypto Trading Meetup of 2025. Absolutely thrilled to have you all here. It's a very good turnout, thank you very much. We're going to be discussing today some of the realities of trading in this fast trading world that we call crypto. Yeah, I'm sure you're all aware of it. Over the next 60 to 80 minutes, maybe an hour and a half if you have some important questions, we're going to be diving into some of the realities and the themes that are shaping the future of crypto trading. So what are we going to talk about? We're going to talk about trading strategies, what works well in a 24-hour market, what doesn't work well. We're going to talk about risk management. It's the absolute backbone of every trader's survival and success, of course. Backtesting and automation tools. I'm sure you're aware of these as well. How are these shaping the way traders are now preparing, executing their strategies to make sure they're successful? We also have algo trading. Once was thought to be only available to institutions, now readily available to the retail trader like you and I. We're going to be the realities of trading. So we're going to be separating the truths, sometimes cold hard truths, from the myths that are in trading as well as professional and crypto prop firms. How are these now shaping the new generation of professional and serious traders? With us today, we have some of the biggest voices in the crypto space. We have CEOs, influencers, community leaders, and of course, experienced traders. Please, at the end of the panel discussion, we're going to be talking from you guys. We're going to be asking from you guys for questions, Q&A, 3, 4, maybe 5 questions maximum. We need to be quick on these, but make sure they're good questions. Challenge them, okay? As you know as well, at the back, we've got refreshments there, coffees, waters, beers, if that's what you need. And also as well, after the panel, we'll be serving up a meal for the networking event, so you can chat to guys in a more informal manner, get to know each other, and discuss some themes. Join me in welcoming our first panel. Welcome to the stage. I know you can see behind who these guys are, but I'll ask them to introduce themselves as well. Starting with you, David.
Hello. Hi guys, good to see you here. I'm David Perk. I trade for almost 11 years, and I basically made every possible mistake in trading. So that's what shaped me into where I am right now, and I'll be glad to share my experiences and the answers to these questions. So that's what I would say.
All right, hi guys, my name is Kevin. I'm the CEO and founder of Clear Finance. We build tools for trading, not just specifically for crypto, but that also for automation, algorithmic trading, and backtesting. So I guess I'm the data guy here.
Hey guys, my name is Samuel. I'm the CEO of HyroTrader, one of the fastest growing crypto prop firms, and thank you all for attending this meetup, and I hope you will enjoy that.
Thank you very much, guys. Thank you. So I do have some questions for you, of course, if you're ready. Okay, so crypto markets run 24/7, unlike traditional markets, of course. How do you think traders should adapt their strategies to such an environment?
24/7 open casino, quite tricky, right? Definitely I would say that it's a tricky thing because many people think that you need to do a lot to make a lot of money, you know, people trying to catch every swing move. And I would say that in a trading, less is more. And we, all of us, definitely didn't start it to be a nerd behind the PC, you know. We all started to, maybe someone for the Lambo, maybe someone for the freedom, right? So we want to have a freedom and a life. So I would definitely suggest not to trade 24/7, but having some schedule, some discipline, you know, so having a time when you trade, when you do gym, when you live a life, right? And also to focus on some best conditions when is a volume and the volatility in the markets, which I would say it's in the New York session. So it's tricky, but you need to control yourself when to trade.
I know I did it myself when I first started trading. It was like you have to be at the PC looking at the charts all the time, and next minute 12 hours have gone by and you've made one trade. So you're right in taking your time.
That's when the mental fatigue comes in, and then you just don't make rational decisions anymore, right? And that's definitely going to affect your trading. And I would have the same answer. Do not try to adapt to a 24/7 market. It's not going to lead to anything being profitable for you.
Yeah, I think, as you said, crypto market runs 24/7, but traders should realize that it's not possible to catch every trade, every trend, every new hot coin, and traders should focus on the strategy which works best for them and improve that strategy. They should basically treat trading like a business, set specific working hours, trading rules, and review performance. Basically, with prop firms, we do the same approach where we set specific rules for our traders as a daily drawdown, maximum drawdown, risk per trade, using stop losses, which ensure that traders will not wipe out the whole account with just one bad move or one bad trade. So, yeah, I think that's it from my side.
Yeah, it brings me on nicely to the next question as well, which is all about risk management. Obviously, risk management is absolutely key in every trader's arsenal type of thing. But like, what do you see where newer traders to the space are failing in risk management?
Risk management is, in my opinion, basically only thing you have, right? Because we all have some edge, we have some statistics, and without the risk management, you can have 10 great trades, and then in one trade, you give it all back, right? So you can be trading the whole month perfectly, and then last day on the month, you give it all back, right? If you don't do good risk management. But I think, as you ask whether people making the mistakes is, I think that everyone is thinking like risking 1% is some kind of mantra, right? But many people doesn't know why they are risking 1%, right? Because they probably didn't do a proper back testing, they don't have a statistic, they're risking just 1% because it's known, right? While in the prop trading, this doesn't work, right? Because you have 10% maximum drawdown, and so you're gonna risk everything in 10 trades. Also, every strategy has periods where you simply not gonna be able to make it, and you will go through some losing streak, right? Losing 10 trades in a row, and I think it has happened to everyone. If it doesn't happen to you, you probably don't trade long enough. And having a risk management and knowing your statistics, it's only thing what keeps you going, right? Because if you don't know this, it will completely destroy you psychologically, because you will fear to take a next trade, right? But that's only thing which you have, which keeps you in a game if you have this losing streak and you know your statistics. And it keeps you going, right? There's another thing I want to mention is that risk management should be set, in my opinion, based on your risk reward and winning ratio, right? People thinking that if you have 60 to 40 winning ratio and a positive risk reward, that is all right. It is all right, but 60% winning ratio means that from 100 trades, you still can lose 40 of them, right? And you don't know the distributions of the wins and losses, and it actually means that you can lose 40 trades, and it can happen that many of losses can come in a row. And when you don't have this, when you don't do when you don't have your statistic and also some kind of a worst case scenario for this, that it can really destroy you psychologically and keeps you from opening a next trade, right? Then you start hesitating if you don't have this data. And mostly what happens is that after these 10 losses, you start to hesitating to open the next trade, so you skip it and you will see that this one would actually work, right? So yeah, I would say that it's actually, as I said, the only one thing which you have, which keeps you in the game in these tough periods, which comes for everyone, for every strategy.
Yeah, of course, of course. You make some really, really good points there. It's like, that's why we always say it's the backbone of your success and survival, right? Sam, with risk management as well, are you seeing any trends or common mistakes people are making with their risk management in terms of progressing through the challenges at HyroTrader?
Yeah, basically from prop firm perspective, I see most of the traders fail because of basically not using stop losses or using too big leverage. And the worst one is revenge trading, where they basically end up in the loss and they overtrade, and in the end they end up even in the bigger loss. So yeah, I think these are the three main issues what traders make on prop firm challenges.
Next we'll move on to how you feel about algorithmic trading. Obviously once thought before that only major institutions can have algorithmic trading, but now they're becoming more readily available to the retail trader. Do you think retail traders are using these well, or is it still the institutions that are really only perfecting the algorithmic trading?
Yeah, sure. Well, so this is a tough one. This is where I personally see like the biggest. Thank you. This is where I personally see like the biggest uneven playing field between institutions and retail traders. Just access to the data and access to the resources and kind of the sheer volume of information they can work with. So, you know, I think there's quite a lot of information floating around that is not necessarily fully accurate. There is obviously institutions leverage algorithms quite a lot, but if you look at the statistics being, 70–80% of market is being run by algorithms, it's from market makers primarily and ultra low time frames. So it's not necessarily something that institutions would kind of drop all the retail traders or all the human traders just to focus on algorithmic trading. It's mostly they try to automate like 10–90% of their processes, and then there could be like the human element coming. Obviously, it's not it's not by the book. It's not just like that every single time. But this is what I've seen, and this is the systems that we helped build. I think, Leo.
Do you think the retail trader can utilize algo trading like well enough to be a success, or is it a case of they need to be doing the back testing themselves, like human style trading?
Ooh, that's a loaded question. So in our experience, we've seen over 2.5 million backtests within our platform. Most of them are automated, and we've seen indicator soups work. It's insane. People mix 7–8 indicators together, and that can work sometimes. But I think if it's very very specific per market, and I don't want to say overfitted, but it's really much focused on like the directional move that the market is moving in, and you're not trying to play in the middle, diddle in the middle, then you should be fine. I think it could work, but it's just that we try to solve it. We try to build like tools where you don't need to know how to code, and you can just write it in plain English and can create algorithms. It's just to get to that winning strategy or winning algo. It's like 1 in 100,000. So it is possible. If this is your way of trading, don't lose hope. Definitely you can get it done. But I'm just saying, like it's not easy. It's not as easy as to kind of automate most of your processes and then come in and have that experience and then discretionary backtest to kind of push you into that final decision.
So basically, you need to utilize all of the skills rather than just rely on the algos.
Sure. Yeah. Yeah. I mean, 80%. Yeah.
Thank you.
Yeah, Anthony, I think I would add up to this question that as you said that algorithms were mainly for the big funds and prop firms and But nowadays, I think it's very accessible to retail traders because they can use API, connect them to the ByBit, Binance, and these crypto exchanges. They can basically build custom bots using TradingView or QuantConnect. And yeah, as I can see, also with HyroTrader, I see like many of our successful traders are the ones who automate strategies and yeah, but I think traders should not rely just on bot. It should be always basically cooperation between bot and between the person. And yeah.
Can I just ask that? Yeah. So you said some of the most successful traders use automation and bots. Can you share like the percentage of how many traders in like the sheer volume use automation compared to the discretionary?
Like I mean like from our fund traders, the best ones are the ones who automate strategies. Like, but it is just maybe 1 or 2% of all of our traders are the ones who automate the strategies.
Right.
So it's very small percentage. Yeah, but as you mentioned, I also saw for example, 2 weeks ago, were here some trader showing me the strategy, and basically his strategy was based only just on indicators, and that was it basically, multiple indicators, and he was able to build a strategy from that, and it was profitable with backtested track record of 120 days, and yeah, I think that's important.
If I can add something just? I would say just, yeah, as some is saying that this semi-automated approach is very important because you can basically code some algo or some kind of a setup based on the indicators or all the things, but it's just a setup, right? You need to also have a code, and that's why many algos fails. You need to have a market context, right? So for example, if I have a strategy based on, let's say, pin bar, right, it will be working sometimes, but also market makers can print a pin bar on the top, just on the reversal, right, and in that case it's failing, right? So also this strategy might work in some uptrend, but we have a uptrend, downtrend, also range, right, or the reversal conditions, and that's where it fails, right? So many algos which I met in my life, it's just a setup, some repeatable pattern, but it's missing the market context, which is very difficult to code because it's very hard to find a timing when market switch from the range to the expansion, and yeah, so that's what I would say. So that's why the semi-automated approach is good. So basically you can scan many markets, you receive some notification that the setup is occurring, then you just come to the chart and you decide, okay, I'll take the setup or I skip it, because you know, you can decide by yourself whether it is fitting into the market conditions. That's what I would add.
Yeah, it was bring me on nicely because we were going to move on and talk about the AI trading, where too many people are maybe now relying on AI tools to maybe sculpt their own trading strategies instead of actually backtesting themselves. In terms of AI bots, are you a fan of them, or do you think traders should not really rely on these? I'm guessing, Kevin, you probably know more with using within the tools.
Well, I guess I would first separate AI and automation, because automation of your processes, that's something I will vocally support, and I think that's something you should do. There's absolutely no reason why you should be sitting, having that mental fatigue 14, 16 hours a day in front of the charts, just scanning it, when there might be some preconditions in your strategy that just qualify the market for you to even be interested in trying to find a trading position, right? So you could fairly easily automate these parts. I also think that automation of the position management is extremely valuable. I don't really see a reason why I would not use it. So in Clio, what we've seen is that most successful traders use 1 or 2 stop losses, but almost always 2+ take profits. So why wouldn't you use like automated tool to move your stop loss to break even when take profit 1 that's it? So you don't have to sit there and make set the position, right? That could most likely lead to some big and emotional decision. So I think that automation you should 100% embrace. AI, that's a little different topic. I mean, I don't wanna be the famous last words kind of guy, but I don't think day trading at this particular rotation of the Earth is at the risk of being substituted by AI. I could be wrong. I mean, I was much more confident about this than 5 years ago, but I still think the nuances of the human brain, that we can distinguish that the same event happening second time is less valuable or maybe more valuable depending on the context. I think we're still better than any sort of AI in that, and obviously AI dominates the all factors. I think what we've seen in the markets in terms of AI bots that are available to you that you can copy trade or buy. I'm not really 100% sure. I didn't do all that research about that, but what we've seen is it's mostly very complex decision trees, and it's just AI kind of more of a buzzword. If you talk about my coding, AI bot, I have not seen anybody being successful with that. Maybe David, have you?
No, I was going to ask as well, because you see all the time now, maybe if people are flicking through Instagram, TikTok, and they see these real traders, and all they do is take a screenshot of a chart, put it into AI, and it's oh, now we can make $1 million. Here we go. I think we're a long way from that being successful, right?
Yeah, again, I think that it's just kind of overfitted. It's going to fit the narrative, the directional market. And once you find yourself, playing at RSI to potato RSI 14, right? If you find yourself playing at RSI 19 or 6 or something like that, combining it with moving average of about 21 specifically, you're probably overfitting. And what I would say is that it's very easy for us to find patterns when there are none. And I guess we can transfer that bias into the vibe coding session.
Well, I personally think that there is definitely the exponential revolution in the AI and how it is improving exponentially. And I think in the near future we will see the good trading AI bots. However, I don't think we are there yet. Maybe someone is training some stuff with the machine learning, some patterns, and as I said about this market context. And I think in the near future it will take out the normal human traders because of the emotions. Emotions are the biggest threat to the traders. What's destroying the success, right? And that's what the boss doesn't have. It simply trades. It follows the strategy. It never closes the trades early. It's always use the stop loss. It doesn't hesitate to open the trade. So I think it's gonna happen, but I'm not there yet. Maybe someone is, but what I really like is that it helps you with the processing the data for the backtest, helping to do the large data processing and help you build the strategies and also the coding, right? Recently I have coded some indicator for the trading view by just try and error, and I get there where I wanted to be. Unfortunately, currently I'm in a stage that I cannot explain what I want, and so I need a coder. But I coded like a 600 lines code, and it almost does what I want to. Right? So it's definitely something which bringing the efficiency not only into trading, into the whole world. So I think everyone should embrace it, and those who will embrace the AI will be doing better than those who not.
So again, if I can piggyback on that, I would definitely say that the AI could be extremely helpful in the micro kind of agentic scenario. So for example, trying to help you determine where to place your stop loss. As soon as you have a certain amount of trades, and you can feed it into algorithm that also looks at ATR or your previous MA, MFA during the position and before and after the position. It can actually help you place stop loss in low pair position, maybe help you even kind of judge the timing of your entries and exits. That's something we plan to introduce in our platform, but automated trading using AI, that is something that I'm not 100% behind yet. Knock on wood, I hope Bill's the job.
So with all of these tools available to everybody, new traders coming into the space, they dream of making it big. Like you said earlier, the Lambos, the houses, I only work 12 minutes a day, things like this. What would you say is the realities of becoming a full-time trader, professional, 100% you are a crypto trader? Is the reality of that everybody can make it, or is it a pipe dream for most?
Yeah, I think trading is very hard, and if you think you are getting rich quick with trading, someone else is getting rich quick out of you. So yeah, that's only what I can say about that. So
Don't become somebody else's liquidity.
yeah, exactly.
I think if you're a trader and you think in terms of, what's the return I can get for a unit of risk, then the opportunity is always going to be there. It doesn't matter what the asset is. If you're willing to do legwork and actually do some sort of back test and maybe forward test, whatever, find out, get that edge, opportunity is going to be there. How easy or hard it is these days, that's something I don't really want to talk about. I think in crypto specifically, there is this asymmetric bet that you can do if you just kind of bring in the long-term bullish bias. You will probably, at least that's what we've seen, you'll be able to get like higher R, than the Forex or CFD guys. So that is, something that will push me to maybe pursue crypto trading. But in general, I think, if you're willing to do the legwork, it's no matter what the asset you pick or whatever time frame you pick, the opportunity is there. The easy mode in crypto might be slightly behind us, but it's there.
Yeah, I would say that it's possible to make money in a trading, but someone who comes to the trading is probably and coming just for the money and for the profit. I think that person's gonna have a hard times, right? It has to be a lifestyle or the passion which will take you through those difficult times and struggles and sacrifices over the weekends, parties, maybe friends, or losing girlfriends. And I think many people expecting that it's going to happen quickly, but you need to have a plan, right? You need to have a plan, how you're gonna scale, how you're gonna make it, what should be actually if we're talking about full-time trading, not for everyone it should be a goal, right? Because I think that if you rely just on the income from the trading, it's difficult. That's why maybe many traders are also the mentors or provide some services in it, because it's definitely easier to trade when you have some income out of the trading, right? And if you trade, why would you do something else out of the trading, right? So that's why many people are teaching. And yeah, so if you have a plan, when you need to get there, you got someone who can help you, to guide you, coach you, fix the mistakes, support you, and you don't expect it to happen in a year, maybe longer, because if you want to become a layer, you need to study for many years, right? Then before you start to make money, right? And people are expecting to make it trading in a year. And in trading, you actually don't know what is working. You need to find it, right? So you maybe waste a few years learning something which doesn't fit you until you find yourself comfortable in your strategy, right? Because again, you buy some course, someone teaching you this, but you will find out that it's not for you. So you take this here, this there, then you develop your own strategy, and it's a long-term process which takes some time, right? For some people, it can be quick. For some people, it can be longer. But I believe that if, as I said, if it is a passion and you don't give up, over the time, you can become a break-even trader, then maybe some small profits, then you can grow bigger and bigger. But there is a steps which goes, right? You don't start to trade and making tens of thousands per month. You start 100 week, break even, then 500, and then you can grow, right? But it also can come some situations when you will feel that you are actually already profitable, that you made it, but something is going to happen, market can change, like during the Corona, market can completely change, and what was working for you stop working, right? So you need to adapt, and that's a challenges which you need to face, right? And also the life challenges, because trading is really a reflection of your life, and if you have some let's say relationship problems or something like that, all of this will reflect always in the trading. So it's hard, it's not impossible, but it can take some time. Mostly it's not so quick like people are expecting.
Yeah, well, I was about to ask, maybe you can give us one harsh reality of trading. I think David gave us about 7 there, which everybody should realize that there are some harsh realities to trading, whereas it's not all sunshine and rainbows. The market changes, you blow up account after account after account, and these things can happen. But Kevin or Sam, do you have anything to add on the harsh reality of what trading can be full time?
Yeah, I think it's about small, consistent profits and surviving long enough during the bear markets and bull markets, and just stay in the game for long years. And but it's possible.
Yeah, I mean, it's the constant mental battle, right? You have those 4 fears of trader: fear of losing money, fear of missing out, fear of leaving money on the table, and fear of being wrong. And if you think about it this way, you'll always feel one of those fears. So I think that's kind of what David was talking about. You need to embrace that the learning process is a J-curve, right? First, you're going to lose money, and then if you're successful, you're going to start coming up again. You'll still be in a loss. And then at a certain point, you'll be at break even, and then it's probably going to happen, that final stretch could happen really quick, right? If you had something that's working. The edge bleed, as David also mentioned, that's one thing that was very painful for me in my trading career, where I just whatever worked for me stopped working, basically, from one day to the next, and that really threw me on a loop. But it is definitely possible. You just need to keep on working on it. And what ultimately pulled me out of it was precisely the backtesting. I went back to the data. I did not give up. It took me a couple really long weekends to find a whole lot of ways that did not work, until I found again one thing that did. And that was my journey.
So the harsh reality is you got to lose money to make money. To a point. Well, thank you very much, guys. I think now we'll probably take some questions from the audience, 2 or 3 questions. So I was going to ask, raise your hands, but this guy here was first. So let's go.
Is high-frequency trading prohibited on HyroTrader platform?
On trading challenges, I think it's prohibited. Yeah, but we are very open to discuss high-frequency trading, arbitrage strategies, or anything individually with traders, because our goal in the future is also to open fund for this type of trading, because I believe that's where the most money is. That's the most profitable type of trading, but it requires a lot of capital, a lot of data, a lot of backtesting, and yeah.
Most of the prop firms have a rule of no gamble, but when it comes to crypto, everything is casino that opens 24/7. How you deal with it? Like how to not glue your account?
What do you mean by gamble?
What do you mean? Do you have the rule of no gamble on your tests?
Yeah, I think there is something like a trader should not open trades based on the Fed meetings and just based on this. Or also by gambling is defined that using too much of the capital on your account.
Thank you.
I'm curious if you have noticed any common denominators that most of the successful traders share.
I think discipline is the key. And from my perspective, the most successful ones who I met are the traders who automate or do something differently than other part of the market. So different strategies, what is not common. Earning on basically on funding fees, doing arbitrage, high-frequency trading, and this type of trading?
I guess my data is quite skewed in this regard because the discipline part is not something I see as the platform provider. What I do see is just somebody who sticks to the process and like figure out what the process actually is, and then just kind of repeats it. It doesn't mean that it doesn't change. It evolves. That's the discretionary part. But somebody who comes in and does the work so that they can define what the process is, and then they just stick to it. If you come to the platform for backtesting and you abandon it after 2-3 positions, or let's say 10 positions that didn't go your way, I don't know if you become disciplined somewhere else. All right, but from what I have seen, it's been somebody who is able to find the process and just stick to it no matter what.
Okay, so I have also a trading community, and we have one guy he actually trading our strategy, and what he's doing is that he basically trade much less than others, and he's trading only at the specific time, and all of his trades and the setups look always same. So he's basically doing always the same thing. He's not vulnerable to some I would say, basically he's always looking for the setup, and when it confirms, then he trade it, right? I see how many others are doing, and I sometimes made a mistake also, like thinking like, okay, this is it, right? And you enter and it doesn't work, right? And this guy is really disciplined, doing the same thing, and also he trades less than others, right? So I think less is more in the trading, right? And I seen somewhere someone was saying like, if you want to improve your strategy and improve your success rate, try this for the 1 month. Let's say that you can trade maximum 2 trades per week. And you will see how it changes your approach, because you will be looking just for the 2 best ones, like a sniper, for the best setups. If you can do just 2, no more, it will really force you to look for the best ones. You will not be taking everything which looks like it is. You will be taking really the best ones. Right.
Thank you.
So, hi guys. From my side, expected question: why you choose ByBit?
Okay, that's a good question. First of all, like ByBit was the most friendly platform for me, and they were much open to talk about integration with HyroTrader as Binance, because as you know, like Binance is a leader, still bigger than ByBit, but ByBit was open, friendly. But I really like the team. It's great product, great team. I was in Dubai multiple times in offices. We organized tournament there, so I think it's also about the relationships and about the platform and about the trust.
Okay, well, I think we've got time for 2 more questions. I'll go over here.
I'm Venkat. So my question is more related to copy trading, basically. So I see a lot of strategies, a lot of tips, but it's all those tips can be provided through copy trading. If someone is doing really good and I'm copying with them, and even I'm ready to pay money for that copy trading. So how you see these strategies in relation to copy trading? Because the question is, because I was a trader myself, and I think it's been difficult for me to follow, and then I'm leaning towards copy trading now. It's providing good profits, and also they are very disciplined. They do full-time trading. Like I work, it's not my full-time trading. So how do you see this?
Okay, so this is quite, again, complex scenario where every strategy, every edge starts to bleed after certain capital is allocated to it, right? Then the question is, what are you using to copy trade it? How big of a delay there is, because then ultimately your results are going to start to differ a little bit, and those small transaction costs or the delays could add up. What I think is the future in this kind of regard is something that we internally call actively managed passive vehicle, where you basically create sort of a crowdsourced knowledge that you then wrap as a trading instrument or investable instrument to other parties to kind of load money on top of that. I think that can work as long as there is one central entity that actually makes sure that the delay is as minimal as possible, and that the capital is kind of capped to whatever the edge can support. So Secondary question you need to kind of ask yourself is why would that person provide copy trading services, right? I think that's pretty straightforward. You should pass your due diligence checks that he's been doing this for a long time, and somehow you have it verified, and that it worked with certain smaller amounts of money before you start putting significant amounts of money on top of that. That is from my point of view. It can work, but it should be structured in a way that it's not just like kind of peer-to-peer. There is some sort of central entity that kind of manages precisely this, the edge bleed and the delays. That would be my concern.
I tried copy trading once. It was back in, I don't know, maybe 2016 was it, or something like that. There was a guy, it was in Forex, and it was 6 years profitable history, and I joined the copy trading, and he blew up completely the whole account. Just 1 week after I joined that, it was actually on the Brexit, I think it was 2016. So he was trading the Brexit, and after 6 years of profitable history, I lost everything. I was like, okay. So since then I never tried that. So you never know what's gonna be the outcome, but what I would be careful definitely is that what is the capital of the person, right? Because if he has a really small capital, let's say few thousands, and he has followers with let's say 500K, he can risk much more. He's risking less than he is earning from the followers, right? And this person, if he goes to some huge drawdown, he will rather risk it all than lose the followers, right? So these people go mostly all in because he can save it and make money and continue, or he just lose 2,000, right, or a few thousands, So what I would be definitely careful is how much that person is trading on himself for his money, right? If it is some significant account, or if it is just a couple thousands and the followers are like 100 times bigger, then it should be some like a proper capital, I would say.
Thank you. And we have time for one last question. I think there was one over here.
Hi, my name is Somens, and I would like to ask mainly Kevin, because I'm a macroeconomist in the markets. If the automatic trading systems also include some sort of macroeconomical expectations, because they're pretty important. I know in the regular markets, like in Chicago Mercantile Exchange or something like that, they're much more important, and they have much more things to do there. If they also include on, for example, crypto, if you have in the automatic trading systems also the macroeconomic expectations. Thank you.
Yeah, are you asking about what we have in Clio platform specifically, or in general?
In general, but also if you look at the institutionals reports or something like that, do you also include that in the polls, or?
Yeah, so in the platform that is publicly available, we do not have macro data. What we have seen and what we built for other companies is basically we separate into three categories. One is fundamental, technical, and the third one is sentimental. And in crypto, it seems that the sentimental part seems to be the main driver. I guess it's the narrative driver, right, in crypto. So that is there now. There has been quite a lot of effort of trying to implement precisely this, some sort of financial reports from the companies that are building the Bitcoin treasuries and stuff like that. But again, if you look at how they behave in the public, primarily on Twitter, I would say, they still kind of announce quite a lot of stuff. For example, what surprised me is the recent Tom Lee, right? He posted the screenshot of using Ichimoku clouds to kind of decide where they're going to buy. Yeah, I thought it was kind of interesting that such a big fund with literally hundreds of millions of billions of dollars is using Ichimoku. So I think that is quite interesting thing that Sam mentioned at the very beginning. In crypto, the data is quite open. You can definitely plug it in and play with it if you have the ability to kind of get it. But from what we've seen, that there's nothing that was kind of worth putting our reputation on to kind of put on the platform.
To be honest, I'm not watching too much the macroeconomic data. I'm mainly like a technical trader looking for the liquidity levels, rejections, the gaps. So I don't have too much to say to that, right? I mean, I'm watching some of like a macroeconomic, sentiment. This I have a little bit knowledge about it, but I really don't include it into my trading. So I'm sorry, not gonna say that too much about it.
Okay, thank you very much, guys. That concludes the Q&A session. I think
We can all give our panelists a bit of a round of applause for opening up their minds. Thank you.